Hi, Dominique, and welcome to another edition of the Week Ahead. I'll just quickly timestamp. Uh, it's just after payroll, so UK time is 1:40. US time is 9:40. So let's kind of, I guess, kick it right off, dive right in. Your big takes, obviously, your thoughts on payrolls and any other data, speeches, market reactions this past week.
So to me, the payroll is finally showing the impact of lower immigration. We've had a surge in immigration up to mid-June when the administration closed the border. And that's why we had very large NFPs and rising unemployment, abnormally low wage growth. We also had a decline in the job finding rate because new immigrants have low skills. They had more difficulties finding jobs. We had a decrease in the spread between African American and Caucasian unemployment rate, but an increase in the spread, Hispanic spread, which I think reflected the fact that these new migrants were mainly Hispanic. So all those things drove inflation, the disinflation, and the strong growth we had, and now they are going to revert. And that's what we saw today. We had very low NFP, which was not so much weather driven, because if you look at the data, it shows that people were not able to work, but they were still paid, so they were considered employed
Right.
uh, because of the weather.
Party
Uh,
time.
you see a little bit. I mean, obviously, not everyone is lucky enough to live with beautiful pine trees in the background, as you are, Andrew. We had a bit of a increase in people not at work because they were on strike, but they were still being paid. So there could be secondary effect from, so it's basically the Boeing strike, which has just been resolved. But the bottom line is that, and interestingly, so what was really interesting in that NFP release was a combination of stable unemployment with very low NFP increase, almost zero, and sustained wage growth. So which makes me think that the positive supply shock that was represented by the immigration surge, which was really the Fed luck, it's now reverted. And no matter who wins the election, we're not going back to it because the immigration surge we had for the past few years is simply politically not sustainable. So there's no way even a Harris administration would reopen the border the way the Biden administration opened it. So, in terms of market reaction, I saw market more confident of a cut in December. For me, change is nothing because I was, even before the NFP, I thought the Fed would cut in December. And next week, of course, the data is in line with the SCP, roughly. Also, Chair Powell declared mission accomplished in Jackson Hole, so it will take time for the Fed to move away from that statement. But where I disagree with the market is I see a bigger risk of cut next year. If you look at the Deck 25 Fed funds, it went down. I disagree. I think what we are going to see is a sticky inflation next year. I don't think the Fed is going to be super aggressive, but even
So to clarify, a bigger risk of not the Fed not being able to deliver on all those cuts next year.
yes,
Fine. Fine.
100%.
Yeah.
And the one thing that would change this view is if we had a combination of a Harris administration with a Republican Congress, and they managed to impose a debt ceiling agreement, because the debt ceiling is, it's coming up. We have a suspension of the debt ceiling that expires in December. So if she faces
US S&P Global October manufacturing PMI at 48.5 versus 47.3 prior.
Okay, so a good PMI, manufacturing PMI. But back to 2025, the risk to my positive view on inflation and growth is if Harris is forced to implement drastic fiscal consolidation by a red Congress, which again, I don't think is likely because, you know, we saw that happen under Obama, but this was a very different situation. The Republican had a much stronger bargaining power. Also, Obama was very unpopular because of the bailout of the banks and so on and so forth. So,
But they could still have the power. So if Harris wins, and which is a possibility, Harris wins, and the Republicans control, I guess, Congress and the Senate, they would be in a pretty good position to force real spending cuts and complain about the deficit and.
Yes, but if you look at the bargains that Biden got when he did his own debt ceiling negotiation, there was no decrease in the deficit. It's extraordinary. The only decrease in the deficit we've seen this fiscal year, so that ended in September, is because the Supreme Court canceled the forgiveness of student loan. But otherwise, the Republicans drove a very soft bargain. I mean, Biden got suspension of the ceiling for for actually zero fiscal consolidation. And so between these two priors, if you will, Obama and Biden, I think Harris is more likely to be closer to the Biden case because look, if she's elected, she turns around and she tells people, the Republicans don't want me to pay your Social Security, Medicare benefits. I mean, this is going to turn against them. I think the Obama situation was very different because the public was so angry. They felt betrayed by the administration over them using the TARP money to bail out the bank rather than to support household. And so I think the Republicans at the time were building on that anger, and that's how they managed to force. So I'm I'm feeling pretty confident that the market reaction was okay for N24, but I think wrong for N25.
Okay. And I guess right now the most likely for the election is Trump wins, Republicans get the Senate, and they don't get Congress. Is that right or no?
I think last I looked at it's in betting markets, and that's poly market, 43% for the red sweep, and then the second likely outcome is Harris wins, and she has a red Senate and a blue House.
Yeah, that's fine.
Yeah.
Okay.
Only 25.
Okay, cool.
And
so,
by the way,
yeah.
just looking at the polls support the betting market. You really see that Harris has lost her edge. They're still within the margin of error, but she's lost ground, and same in the swing states.
Yeah.
So this is also, I agree with the betting markets.
Right. Although I think they've narrowed a little bit. I think in the last day or two. Maybe it's like. Anyway, we'll see exactly. Okay, so generally this plays out. I mean, we talked about this like 2 or 3 payrolls ago. So you're really ahead of it, where saying this closing of the border starting in kind of end of June is going to play out. And it's going to play out with payrolls are going to be smaller, but don't overestimate. At the same time, wages will be stickier, because there's just less supply, and even if it's slightly less demand, it's definitely less supply. So the result will be this, and that's what's been playing out. So that was a great call. Okay, anything else that's kind of stood out in the past week?
I think this was the main, this was really the print everybody was waiting for. So that's the main thing. The change in the polls was the other new thing, but we discussed that. So no, that's about it.
Okay. It's funny. Has to be, we're doing a lot of this work around event analytics and size of potential moves in currencies, and even eventually be in the rates markets, equity markets. Payrolls has been one of the biggest drivers, especially even just for FX. But the moves have been pretty small so far. Now, I think that the market has took a few hours. I think if I remember the last payrolls also digested in the end. It took this some of these numbers as like the economy's still fine, but maybe a little bit slower. And you're questioning even that, but I think the strength of the economy is not really in question. So it still in theory should be viewed as probably a pretty positive number for risk.
Because of the Fed reaction function. But I would think that with slower immigration, we're going to see a slowdown in growth as well. But just like in the labor market, I think overall, this will be positive for inflation because we are likely to see more of a slowdown in the supplies and in the demand for goods and services. So we could have, a smaller growth, a smaller output gap, but still a positive one.
Right. Okay. So inflation stickier than right now. Your view, and obviously some of it is predicated upon what's going to happen next week, assuming it gets resolved next week. Is inflation is stickier than you believe the market view?
Yeah.
And you and Antonio, yes, and Antonio as well, and you guys had a really good call on shorting fixed income in the 10-year and 30-year, and we're looking to re-enter that trade, most likely depending upon the election.
Exactly.
Okay.
And the stickiness and the growth dynamism, I think, has to do in part with the investment boom that we have, the capex, and that is linked to subsidies. Subsidies basically for manufacturing robots.
And Trump, if elected, wouldn't end that or try and roll that back.
We'll see. This is America, we are the golden land of lobbyists. So I think Trump is going to take down the subsidies of the Biden administration. And let's see if they replace
put in new subsidies. Yes.
Of their own liking. So hopefully not, because seriously, what do we have in the US at the moment? We have an overheating economy with an absolutely unsustainable budget deficit. So what we need is a gradual decrease in the budget deficit. Are we going to get that? I'm not sure.
What we need is higher growth and an increase in the budget deficit. Anyway, okay, cool. And then for the upcoming week, obviously, I think we're pretty clear. We talked through, and you guys have put out some interesting scenario analysis stuff. And I'm sure we'll continue to probably reiterate that stuff on Monday. I'd also recommend for our pro clients, Sam, and also working with Neil, have been putting out things showing the implied forward vol for a bunch of different currency pairs, including dollar MEX, if you want to see something interesting, and the size of the, and what the implied expected moves would be on election day. Obviously, that's assuming that the results come out in those 24 hours, probably the following day. Anything else people should be looking at next week? Anything else? Obviously, it's going to be a big part of it.
The Fed is pretty much a done deal. People might look at the tone, which I think will remain hawkish, but the Fed has this habit of talking hawkish and cutting. It's not a Fed that's going to crash.
A hawkish 50 cut, which people are then claiming that was a mistake, but followed by not a pause, but a hawkish 25 and another hawkish 25 cut.
Yeah. and SCP showing fewer cuts next year. I'm not sure we'll get a hint of that. But I mean, to be honest, of the two events, I think the election and the composition of Congress is a more important one.
Right. Okay, cool. All right, anything else or?
No, we all deserve to take a deep breath after Tuesday, actually. And we will. There's not much in terms of data next week. Okay, we get the services PMI, but I mean, it's important. We have a big section on the website on how to trade it from an economics perspective. Not that important because it's really decoupled from GDP. I guess that's we get the consumer confidence from the University of Michigan and inflation expectations. But again, I'm not expecting much that is market moving there. So it's really about Tuesday.
Yeah. Okay, cool. I mean, in addition, like I said, we're doing a lot of stuff around the event work and continuing to build that out, and we're hopefully be releasing kind of visualization of those analytics within the next kind of few weeks. We're going to be making a bunch of updates for the emerging markets flow monitor. So that's looking at kind of much more real time flows into equities and fixed income across emerging markets. Definitely recommend people to check that out, but we'll be adding new functionality there. Had a few new trades in on our modern portfolio, closed a few trades that have been working well. So the portfolio's done quite well over the last kind of 2 or 3 weeks. Closed a good commodity trade, and yeah, just kind of wish everyone a nice weekend, and hopefully a good, clean, and hopefully safe elections for the US. I'm gonna try and see if I could vote at my the embassy here, and yeah, wish everyone
and lots of popcorn, just in case we have a long election night.
Exactly. Multi-screens between CNN, MSN, and Fox.
Oh, what a nightmare.
Yes.
Anyway.
Cool.
Great.
Good luck, everyone. Bye.